Hey, good morning, everybody. This is Chris here with your London close trading session. It's the 10th of June, Wednesday, or as I like to call it, Fed Wednesday. We have the Fed rate announcement coming up here in a few hours, so that's definitely a risk event, something to be mindful of during the London close session. I think today's going to be a little bit more muted, especially with any pair impacted by the U.S. dollar, which is most of them. So let's get started. Heat map. You can see it's pretty mixed here. Swiss franc was bought up, but not substantially. You can see the max gain is against the CAD at 0.57%. Aussie was pretty well supported today too, but once again, not huge. Up 0.51 and declining 0.52. So U.S. dollar is down for the most part. Euro is down. CAD way down. So that is kind of what we have going on in terms of heat map. So once again, dollar broad-based losses ahead of the FOMC. The eyes are really on the dot plot, so that's what what the market's going to be really looking at. The expectation is a hold, obviously, but the expectation is also a continuation of bearish bias, and that should create more of a sell-off on the dollar. Because right now there's not a lot of positives to being invested in the dollar. You're not really making any interest. So it's not a very high-yielding currency anymore. And the U.S. economy is not doing as well. Today, the CPI number came in at negative 0.1%. The expectation was flat. So it is better than the previous month, which was at negative 0.8%, but the recovery is not quite as much as the markets expected, the analysts expected here. So, like I said, the risk seems tilted towards the downside on the dollar. I mean, that's pretty much all I could find in terms of what I'd like to see here. The pound gains a little bit. Euro still remaining overbought, but it's definitely stronger than the dollar. Aussie strong, and the yen highest mark since May. So the top currency for today was the Aussie, followed by the Kiwi, then Swiss franc and yen. So that's what we're looking at. The weakest currency today so far was the CAD. So before we get into kind of what we're going to look at today, which I'm looking at possibly a pound yen short. That I think could be a nice little trade here for a couple hours. Nice little scalp before FOMC. But let me show you yesterday's trade. So we put on a Swiss franc yen trade. So we got in at the London close time frame. At this level here, we saw it try to bounce up once, try to bounce up twice, and it failed, obviously. And it pretty much started a downward trend here all the way, and it made it just before our target of 113.05. It made it to 113.07 and a half, and it spiked up 113.072. So you're probably looking at 113.075 before the spike up. So we actually got out of this thing way before that, because this was 7 o'clock. That's the London Open. So we got out probably in this area here. So we had a nice little profit taking, And what I've been doing lately, that seems to be working pretty well, is when it hits 1-to-1 on my risk to reward, I'm just getting out half the position and moving my stop to break even. Because what I'm noticing, this is just an observation, and this is something where I'm always looking to improve and grow, and how can I maximize profit? What I'm noticing is if price spikes and then hits my entry level, it typically goes the opposite way after that. So what I want is I want that spike down. I want to take some money and protect myself. If it comes back up, generally it's going to keep going. And I don't even mind getting into a reverse position as I did 2 days ago on Aussie yen. So it's good not to be married to a viewpoint. If the market's telling you something different, you need to listen to the market. You don't have to be right. You just want to be profitable. So that's kind of my mindset when I'm looking at trading here. And as long as your risk, your risk strategy is firmly in place, which it should be, that you can do this stuff and be fluid and really, maximize your profits for the day on something like this. So, like I said, just to prevent you from having itchy fingers, which I get sometimes, when it reaches a 1-to-1, take half off and move your stop to break even. And like I said, with this strategy, if it hits that entry level again, typically it goes in the opposite direction. I've very rarely seen it go up or go down and then hit the level and then go back down again. It just doesn't happen as often. So probability is it's going to stop you out if it goes back up. So at least that way you're taking in some money for the day, and you can call it a profitable day. That is kind of what happened yesterday. And just talking about risk strategy, it's important to define your risk, obviously per trade, but something that maybe not a lot of people do is define your risk per day. So, what's the max percentage that you're prepared to lose for the day? I think you need to define that. And, if you're in like 2 trades, define your risk. If it's 1% or 2% for the day, and if it you lose, which will happen, call it a day. Call it a day. Don't chase. And that's where a lot of people get in trouble, is they'll start chasing to try to get to break even. And that's what gamblers do. And we're not gamblers here. We're investors. And that's how you want to be treating this business, is as an investor. Okay. So anyway, that's my 5 minutes on the soapbox. Let's go to the pound yen. And let's take a look and see what we have here. It just looks like a drop is coming here. See this buildup of volume right here? I mean, you start to see a little bit of an upward, but then it dropped below this, and you can kind of see this consolidation here over the last hour and a half. So the volume's built up right here. It's under that volume. That typically means it's going to take a turn for the worst here, or take a turn downward. The level that we have, there was a pretty big trend line that it broke. Let me just pull it up here. Give me a second, guys. I want to make sure I've got the right line here. Oh. Oh, did it disappear? Maybe it did. Thought I had it, but guess not. Yeah, I want to stay away from any U.S. pairs right now, because it's going to be very muted until the till the FOMC, and I am not willing to be in the FOMC with the U.S. pair. It's going to be too risky. It's going to fly all over the place. So you can see this one here, 136.67. It's looking like it's going to take a break right here. But it's still stalling. So I'm going to keep an eye on it. I don't see the move yet. I kind of wish we could have gotten in here, or maybe, a little bit of this retracement up to this level here, because that would have been a nice little move where we could have used this as our stop and taken the ride down. But for now, I don't see the move quite yet. And as it gets later on in the session, I'm going to be very, very weary to take it, just because it's going to consolidate before this FOMC here as things go along. So it's been consolidating over the last hour and a half. I don't know it's going to move from this level till 8 o'clock. Or 8 o'clock my time. Let's hold off on this one for now. Let me see if there's anything else, guys, that's tradable right now. Like I said, the U.S. don't want to be in that right now. Pound Aussie, maybe. And Aussie's still strong. The pound's going to be it's going to be influenced heavily by this. So, what I'm looking at right now, guys, is I'm looking at different trade levels and breaks. This auto chartist tool is pretty cool, and it shows you different levels. I'll show you guys what I'm talking about here. Oops. Let me share with you guys what I'm looking at. So you see this auto chartist tool. It's pretty cool, and it kind of gives you projections. But what I'm looking at is I'm just looking at levels. That's all I'm looking at. I'm definitely not taking the trades in these directions or being influenced by that at all. I'm looking at the global fundamentals and the sentiment to give me the direction on where I want to trade and what I'm looking for. And what I look for here is the levels, where a trade would make sense for a good risk to reward in the direction that I want to go. So, like something like this, if it flips around, I could go the opposite way and use this as the stop. So just figured I'd show you guys that, because this is what I'm looking at when I'm talking to you guys about looking for currency pairs to trade. And like I said, I'm looking for something where, there's maybe an Aussie or Kiwi long, especially the Kiwi. I think the Kiwi's pretty strong right now. My only fear is the RBNZ will get involved eventually here, but that's a small risk compared to the strength of the economy for them right now. This thing updates every 15 minutes, I believe. That's the lowest time frame here, but you can see it's got some exotics. I just don't see any good levels, so this will tell me if it's at a good level and it's been a break or something along those lines, like this pound Aussie. But I don't really see anything that I'd be willing to trade. Like something like this, you're looking at 10 pips maybe, and the flip is not really good. So so that's a look at, like I said, when I look for pairs, what I look for. Yeah. Let me get you back to our trade screen here. All right, so really nothing right now, guys. We're gonna kind of sit on our hands and wait. It doesn't seem like there's a lot of volatility or movement here with any pair. So I would have loved to seen this little break, but in the last hour and a half, it seems to be at this level. So we're gonna have to wait on that. FOMC is a big, big driver, especially with the U.S. being the major currency in the world. So let me sit on this, and then let's take a look and see if we find anything else that's worth trading that I think will move during this time frame, which I don't see a lot. It does seem like the risk off is starting to take hold a little bit, though. Just from what I'm starting to see in the market, it seems like the trend is starting to change. Um, yeah, there's a lot of U.S. pair stuff going on. This could be a good one. 79.96. There was a break on a trend on a CAD yen, and I don't think the FOMC will really impact either of these as much. And you see this little flip up here. That's good. We want that. Something up maybe to the figure at 80 might be a nice little move downward. It's stalled at 79.81. But you can see here that that's pretty good. Let me take a look at the volume here. This is the other thing I like to look at is, we want to see where's the volume in this little cluster. So on the latest leg down, where's the volume? And we're looking at a nice little support level at 80.32. It's already broken this former low, and you can see it's stalled below it. So it's going to take a little bit more to push it downward, but I'd like to see it get into some of this bigger volume up here, and then maybe take another leg down. So what I'd be looking to see is a top up here, and then maybe on a shorter term time frame, it to start to turn. And if it does that turn, that's when we'll get in with this as kind of our stop level. So let's keep an eye on this. This could be a good one here. So I'd like to see it get up to at least 80.13. I don't know if it'll make it up there, but if it can hit the figure at least and then start the turn, I'd be interested. Canadian dollar is a little weak right now as oil is starting to taper off. A lot of economists are talking about expecting another downward turn in oil as demand's pretty much lagging right now, comparatively to the price. So that would bode well for this trade. But once again, we want to make sure that price is showing us that it's going to go in our direction here first. And that's something that I've really been working on here too, to really pinpoint this strategy here is getting confirmation. It gives you just a much higher probability of a win, and that's what I'm looking for. So when is price going to turn? And when it turns, and starts another break, the probability it's going to keep going downward. So let's keep an eye on this one. This is going to be better for us than the pound yen, because I think the pound's going to be all over the place when FOMC hits. I don't think this will move quite as much for that, because Canadian dollar is more of a commodity currency, meaning it's impacted more by oil, which is their largest export, in comparison to most other things. So I don't see the Canadian dollar strengthening or weakening so much based on what the dollar does. And oil, once again, is not going to be influenced by this FOMC announcement. So we will keep an eye on this, folks, and see what happens, and we'll go from there. All right. So I'll keep this chart up, and if it moves where we need it to move, I will hop back on, and we will take this trade and see if we can make some money today. All right. So thanks, guys, and I'll catch y'all in the room. The CAD yen, you see it starting to reject. It made it up to the level here and starting to reject a little bit. So we're going to keep a close eye on this guy, and I'm even looking, like I said, at a smaller time frame to see if it kind of breaks this little run up here. So we don't know how far it's going to go, and I don't want to guess. So what I'm looking for is, like I said, a little bit of consolidation and then a break, and we'll get in on the break downwards. So that break downwards should at least get us down to this level, and that'll get us into some profit for the day. And then if it takes another leg down, we're looking at some really good profit. So we'll keep an eye on it, and I'll let you guys know when and if we're going to get into this trade. All right? Thanks.